Hey traders, Tim Bohen here with Stocks to Trade. Today we're jumping back into the adrenaline-fueled world of penny stocks. I love them. Man, listen, I like to swing trade. I like to invest a little bit too, but my true passion will always be in penny stocks because the fact is you'll never see the type of risk to reward in higher price stocks or ETFs or long-term holds that you see in penny stocks. So before we get into the nitty-gritty, let's set the record straight. When it comes to penny stocks, we're talking about trading, not investing. One of the biggest things I see people screw up is they start believing in low price stocks. We love to trade them, but we don't date them, all right? It's a short-term thing. And these stocks are known for the wild volatility. That's why we trade them, which can be a gold mine or a minefield. So let's dive into how you can navigate these waters safely and potentially reap big rewards and get ready for your expert trading guide to master these penny stocks. So starting out with kind of some definitions and concepts. Penny stocks are those little engines that could trip trading for $5 or less. That is one thing that trips up people. When they hear penny stocks, they think stocks that are trading for 1 or 2 or 3 cents. But in the grand scheme of Wall Street, anything $5 or less is called a penny stock. They're small, but in what they lack in price, they make up for in volatility. This makes them perfect candidates for trading with the potential for significant intraday gains. But remember, this volatility is a double-edged sword, making penny stocks highly risky for long-term investments. Almost all penny stocks eventually fail. Now, they might go from $1 to $100, like literally. We've seen short squeezes do that in a few days, but eventually they almost all go back to $1. Almost no penny stocks in history have ever succeeded long term. Now that sounds scary, but think about the trading potential. Just don't believe in them. And trading penny stocks is like being a sprinter rather than a marathon runner. You're looking for quick, significant gains based on short-term movements. And you can start by setting up your brokerage account and then dive into your research and strategy development. Utilize a robust trading platform like StocksToTrade, the #1 day trading platform out there, because it offers comprehensive tools to find, analyze, and track potential penny stock gold mines. Now, let's talk about applications and usage, okay? Embrace education. One of the things I am most proud of what we do at StocksToTrade is StocksToTrade University. We have an entire website that is only education. That's all it is. We call it the university site. There's literally, I think I have 8,000 videos on there, okay? They're categorized. You can break them up, but it's not just me. Matt Monaco has videos there. Tim Sykes has videos there. There's Tim Grattani videos there. There's this entire education, and really, that's what I think we absolutely knock out of the park when it comes to our competition. Nobody does education better than us. And your best defense against the risks of penny stocks is a solid education. Understanding the market, the stocks, and the strategies that can help you identify trade-worthy movements. Research is absolutely important, and you need to be diligent. Success in penny stock trading hinges on your ability to research and analyze potential trades. You need to look into a company's fundamentals, recent news, and their market position. Technical analysis, guys, it's one of the hardest things to learn, but it's one of the most important. So what's great about University site, we have literally thousands of technical analysis videos. Like, listen, technical analysis isn't hard to learn. It just takes a lot of repetition. Like, you'll hear me talk about chart patterns or other traders talk about chart patterns, and you look at it and you're like, I don't see the pattern. It's not that the pattern is hard to see. The problem is you haven't seen enough examples. It's pattern recognition. Just like you can look at something and quickly recognize it in the world, chart patterns are like that. You simply haven't been exposed to enough of them to be able to identify them. So learn to read stock charts and identify patterns that can signal potential moves. This helps you time your trades more effectively and set your risk and your goals. This might be the most important thing when it comes to penny stocks. Always stay skeptical. Remember, most penny stock companies are on shaky ground. Don't fall for the hype or promises of groundbreaking developments. You can trade them short term, but don't get suckered in. Exception is if you do your due diligence, there are diamonds in the rough. They're very rare, okay? But what most people do, they do no research, they read a press release, and they become a believer. Now, if you go through the fundamentals, you go through the business, you go through the SEC filings, and you decide it is a longer term hold, that's different. But you're going to find one of those a year probably in penny stocks. Most of them are day trades only. Next, always have a trading plan. You have to have a clear plan before you enter. It should outline your trading goals, your risk management, your stop loss, your strategies, and your criteria for choosing those penny stocks. Every trade plan should have a clearly defined entry based on the chart, exit based on the chart, stop loss and goal, as well as what I call a boredom contingency. This is something that a lot of people overlook. A lot of these stocks spike and then do nothing the rest of the day. So what are you going to do if it's 3:45 p.m. and you're in a penny stock that went nowhere? If you're smart, you have what I call a boredom contingency and you kick that thing to the curb. Because typically, if they don't close strong, they gap down the next day. Now, people that don't have a boredom contingency, they hold it, hoping for more, and then they get wrecked the next day. Has that been you? So, next, you always have to manage your risk. Given their unpredictable nature, managing risk is absolutely vital. You have to have stop loss orders in order to limit potential losses and never invest more than you can afford to lose. Remember, these are volatile stocks. Any money you put into penny stocks should be money that you can afford to lose if disaster hits. Now, with stop losses, you should never get in that situation, but at the end of the day, you should never put yourself in a tight financial bind because you have too much money in one of these stocks. Next, keep your emotions in check. The fast pace of penny stock trading can be a roller coaster. Listen, always have that trade plan before you enter. You should never be in a trade unless you know what you're going to do if it goes against you or if it goes in your favor. When you're in a trade, you're emotionally attached and you start changing the plan or you have no plan at all, which leads to emotional decision making. And I am telling you, emotional decision making in trading will absolutely destroy you. Now, you're human. You can't eliminate all emotion, but you have to minimize it. Next, listen, leverage Oracle. Okay, many of you might be familiar with Oracle. Maybe you aren't. I'm actually going to invite you to join a webinar at the end of this video, giving you a full tour of Oracle. But Oracle is our stock trading algorithm that does exactly a lot of what I just talked about. It tells you which stock to buy, where to stop out, and where to take profits. So with the complexity of enhancing your trading strategy, consider checking out Oracle. And you can do that in that webinar below that I'll mention. Our proprietary algorithms scan the markets 24/7, delivering high potential trade alerts directly to you in the software. This minimizes mistakes and takes the emotion out of the equation, offering a clearer path to potentially profitable stocks. Now, I know I've talked a lot about the dangers. So the next question is, why trade penny stocks? Listen, the allure of penny stocks lies in their potential for rapid gains. While they're not suitable for investing or long-term holding due to their risk, they offer seasoned traders the chance to capitalize on their volatility. It's about making short, snap trades based on informed decisions, not holding out for long-term growth. In conclusion, penny stocks are not for everyone, but for the well-prepared trader, they offer an exciting avenue of growth. Remember, success in this arena requires vigilance, discipline, and a willingness to continuously learn and adapt. Armed with the right tools like StocksToTrade and Oracle, a trader's mindset, you're well on your way to mastering the art of penny stock trading. That being said, join us for these daily webinars giving you a full tour of Oracle and dive deeper into the strategies that can help you navigate the penny stock market more effectively. So click that link below. You'll get full access to an hour-long webinar breaking down everything using Oracle, the #1 day trading algorithm. And I think I mentioned this, but if I forgot, these webinars are 7 days a week from morning to night, even on weekends. So there's no downside. Click that link, drop your info in, and join the next webinar. I'll see you there.